What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
All right, guys, Jay Martin here, CEO of Cambridge House, and I'm joined right now by Jeff Clark, the gold and silver analyst at goldsilver.com and the gold advisor on Twitter. Jeff, it's good to have you back.
It's great to be back with you, Jay. Thanks.
Well, I wanted to bring you back on because we chatted in January at the summit we produced on the YouTube channel then, the VRIC. And, through December and January, we ended up collecting about 100 forecasts from newsletter writers, analysts, money managers, because everybody puts out their forecasts for the year in December and January. And we collected a ton of them. But the first quarter has been not what a lot of us expected, right? So I wanted to pull on a few of the personalities that I trust and opinions I respect to get an update and say, here's where we're at, here's where our conviction lies. Because I am getting some messages these days from our precious metals investors who, at the end of a 7-month softening in the gold price, are now starting to question their conviction and wonder if they made the right decisions in their portfolio last spring and summer. So why don't we start there, Jeff? What do you have to say to investors who are questioning their conviction right now in regards to gold and silver?
I think it's always wise to, reconsider or question your assumptions about a bull market. But there's really nothing, honestly, that has forced me to change my mind. The fact that the prices are stagnant, weak, range bound, however you want to describe it, doesn't really change my idea of where we are going in the big picture ultimately. Look at 2006. Pull up a price chart of gold in 2006. It was flat for a long time, over a year, I believe. I wish I had the data in front of me, but it was flat for a long time. And a lot of people thought, this is not... the bull market's over. It's not going anywhere. Yeah. And a lot of people used that opportunity to buy. And of course, they were very well rewarded after that. There are other examples like this in history as well, where the price is really flat in the middle of a bull market, or the price even goes down a lot in the middle of a bull market. So I think if you focus on the big picture and not the road right in front of you, but the horizon, and you look at all the factors out there that could impact and propel gold and silver prices higher, you have to view that as the current environment as something that would be more of a buying opportunity as opposed to anything else. At least that's how I view it. I don't think the bull market is over. I don't think we're in a bear market. Look at 2008. Look what happened then. Gold and silver prices sold off big time in October. Gold fell by a third, from 1,000 down to 700. By any technical indication, we started a bear market. And yes, of course, that was the time to buy. If you happened to buy on Halloween Day in October of 2008, you were very well rewarded. I think, based on incidences like that, we're in a similar environment now. The price is range bound, but ultimately, I think we're headed much, much higher.
Okay, thanks for that perspective. I like how you encouraged investors to step back from the day-to-day fluctuations, because it's so easy to get trapped in that, right? You start obsessing over the price of things and the day-by-day or even week-by-week movements, which in the big picture aren't so relevant. So therefore, Jeff, what are the macro trends that keep your conviction high right now that investors should focus on?
I think, in the big picture, it's what Mike Maloney has talked about. It's monetary abuse, basically. What we're doing to the currency, especially in the US, but this is a global thing as well. Not only are all currencies today fiat for the first time in recorded history, but you have most of the advanced economies grossly abusing that currency, right? And I just don't believe in a free lunch. I think there will be consequences to that. It doesn't feel like there will be consequences right now, right? But there is no free lunch. Look at almost any period in history, and you'll see that when there are abuses like this, going all the way back to the Romans, that this has impacts on the currency. It causes a monetary shift. It causes a crisis. It causes turbulence. And when that shift begins to take place, that's when gold and silver are really going to shine, irrespective of what any other asset might do. So, in the big picture, I really view this as, look at it this way. I'm going to hold gold and silver and continue to buy on weakness until the monetary system is redone. Until the dollar is, the abuse the dollar is going through. And I'm not saying this is imminent. I'm just saying in the big picture, I'm going to hold gold and silver and mining stocks until there's some kind of revamping of the system, because there's always an accounting of the monetary abuse versus the price of gold and silver. And that process has not taken place yet. Therefore, I'm holding and buying until it does. Okay.
So then, if you built your portfolio last spring, call it early spring, picked off a lot of what you interpreted to be top performers in the gold and silver space, saw a phenomenal rally through the spring until July, August, and even a little bit after that. Right now, what are you doing, Jeff? So we've seen a depression in the price, valuations have come down. I stopped buying gold and mining equities in July, August, because things got a bit expensive. It actually got kind of frothy for a short period there. So it's almost like a reset, a second chance to participate, but you have to have the wherewithal to believe that your thesis is correct, that this is just that 30% correction that occurs in almost every bull market. My question, Jeff, is what are you doing right now? Are you sitting on cash waiting for things to come down even further? Are you actively buying in the market, or are you sitting in your portfolio happy with it and this is just a blip on the radar?
Well, first, the key to determining what gold and silver equities are going to do is what are gold and silver going to do? So irrespective of what the stock market does, what real estate does, what Bitcoin does, what do gold and silver do? If you believe they're ultimately headed higher, then that tells us that based on history, the equities are headed higher as well. So what I did, and I say this in full humility, but I bought very aggressively last March, both miners and the physical metal, and obviously did very well. And then in July and August, I started taking profits. And now what I've been doing is basically buying. I'm doing three things. I'm holding what I have, because even if there's a stock market crash, I'm looking at what gold and silver are going to do, not what the stock market is going to do, at least looking more to that. So I'm holding. I'm building cash, because if there is a big sell-off, you want to be able to take advantage of it. And having a nice cash buffer, that kind of empowers you. That empowers your portfolio, right? It gives you a nice buffer, and it allows you to take advantage of opportunities. And then the third thing I'm doing is I am selectively buying right now. You have some producers that are off 50% from their August high last year. So, this is a strategy I use. And again, I say it in full humility. The timing has been great for me, but I learned the hard way. I'll admit to you, and this is embarrassing, but Jay, I chased the uranium stocks up in 2000. Was it 6, the big run up? Right. And then crash in 07, I believe. I chased them up because I thought, wow, this is a raging bull market. I want to participate. And oh man, I got hurt, financially in my portfolio because I chased them. So I learned by experience through the school of hard knocks not to chase. And so I don't chase. And I also learned that you buy when things are weak. If you believe in the big picture, if someone is doubting the big picture of where gold and silver are headed, then you probably don't want to buy. My conviction is I think by any reasonable standard, they're headed higher. So I'm buying now. So that's what I've been doing.
Okay. Now, last we spoke in January, it was a little bit less clear on how the vaccine rollout and recovery was going to look, right, on the back of this pandemic. You've since made some pretty bold predictions on the CPI for this year. So my question for you is, I generally get if I were to really generalize, two predictions on this show about what's going to happen after we reopen the economy. Either we're going to have a widespread insolvency crisis that is yet to be realized because of all the stimulus. And once that is shut down, small to medium businesses will be left on their own, and the truth will come out that they're insolvent, right? That you can't shut down an economy for 12 months without severe consequences coast to coast. But the second is, no, it's actually going to be the economic boom of our lifetime, because the whole economy simultaneously is going to wake up and begin charging. Do either one of those plot lines resonate more with you, Jeff, or is it somewhere in the middle?
The bold prediction I make, and I'm staying with it in January, was that the CPI doubles. Yeah. We've had asset price inflation that comes from the monetary side of things, but what's coming now is fiscal stimulus, and that's a direct injection into the economy. And also you have so many other inflation indicators, commodity prices that look like Bitcoin charts. Input costs are rising, shipping costs have tripled in a year. So that's going to cause consumer price inflation. So I made that prediction when the CPI was 1.4. So I thought within a year, by January, it gets to 2.8. Who knows? That may end up being conservative. Now, the caveat to all this is that if we do get a stock market crash, that is obviously deflationary, and that would temporarily, at least, hurt the inflation argument. But there's also the combination, inflation and deflation, the stagflation like we had in the 70s and 80s, right? That's also a possibility. But yes, I think I do lean a little more toward the inflationary side of things. There's a lot of pent up demand. Supply is crimped. Savings, I don't know if a lot of people know this, savings rate in the US are at their highest level ever in recorded history since the Fed started keeping records on that. There's more in household savings right now than ever before. So a lot of that cash is going to come out as well when things start to open back up. People are anxious to get out again, just like you and I were talking. We got on air here. We want to travel again. I think all of this is going to contribute to a real push on demand and a real push on supply, a real crimp on supply. All of that is inflationary. So I tend to lean toward that argument. The great thing about gold and silver, though, is they don't have to have inflation to do well. They're a crisis hedge. They're a store of value. There's a lot of other catalysts that could push them higher, right? I just happen to think that inflation is probably one of the bigger stories, probably later this year, probably this summer.
Okay. Now, another prediction you made earlier this year was your expectation that silver will double. Do you stand by that today?
Yeah, I made that in January as well. So I think silver hits $50 by, by the end of the year, January, somewhere in there. And that's based partly on the inflation argument, right? And silver clearly responds historically directly to inflation. So if consumer prices do move up, and again, I'm referring to consumer prices here, not monetary inflation, but the actual CPI readings. If that begins to move up and makes headlines this summer, I think silver responds. And silver's biggest bull market in history was during the runaway inflation of the 70s. Its second biggest bull market was during the fear of inflation from 2009 to 11 with all the QE efforts. We didn't actually get CPI inflation, right? Mm-hmm. But we had the fear of inflation, and that fear drove people into gold and silver. And silver always responds more than gold. In every single bull market, silver has outperformed gold. And I think that's exactly what will happen again.
And is that reflected now as you're back in hunting mode, which I love. I love to hear this. And so congrats, took profits July, August. Smart. Now you're ready to go back into the market at depressed valuations from when you exited. Are you approaching with an emphasis on silver therefore for that torque, or are you split? How are you looking right now?
Oh, I'm looking at both gold and silver, definitely. But obviously, we're including silver in this mix. You want to have silver in your portfolio. I wouldn't go so far as to say I would have only silver, because there are some differences between gold and silver. We can go into that if you want, but I'm looking at both. I'm looking at the opportunity. It's just that with silver, you are going to get more torque, as you say. That's well put. It's going to rise more. The equities are probably going to rise a lot more than the gold equities. So I'm definitely focused on both.
Okay. Last question before I want to try to peel some stock picks out of you, Jeff. So the world is opening up now. We're getting back in airplanes. You're heading to Miami in June. We're looking at booking events in Florida in September. And this is all good stuff. So now that we can get on airplanes and travel again, is there pent up M&A demand that will be realized?
Oh, I love this topic because, yes, that's exactly right. Think about it. Analysts have not been able to get on planes, just like we haven't been able to get on planes, right? So all the bank analysts and all that, they've not been able to visit projects. Now they're going to be able to. And so M&A is likely going to pick up. It's already starting to pick up a little bit, right? I think for that reason alone, you're going to have analysts on site looking at projects. We also have simultaneously, supply is dropping, new supply is dropping in both gold, but especially silver. So there needs to be M&A. They haven't done as much exploration and development and expansion since 2013 when prices crashed. So there has to be M&A for that reason as well. So you put those two factors together and you could see a nice little surge in M&A this year, next year, and going forward. So I think, you want to look at things that are big and rich.
Can I press you for any takeout targets that you're looking at?
Well, I wanted to talk to you about First Majestic Silver too, because they just did M&A, right? They bought the Jarrett Canyon gold mine there in Nevada, which is kind of in my backyard. I've actually been there, but I didn't get to tour the operations. But this is a very big mine, and it produces a lot of gold every year. First Majestic just bought that. And interestingly, so that's gold, right? And First Majestic Silver has had primary silver projects only, but they bought a gold deposit, and it'll increase production by roughly 30%. The dilution was about 12%. So it's a very accretive deal, but they're diversifying, into gold. But they assured me, I've talked to management about, they assured me that their next asset purchase is going to be silver. Definitely, you can count on it, is what he actually said. So
now First Majestic, to my knowledge, Jeff, was the only pure silver producer up until this acquisition. Anybody else on your radar?
For silver I like that. And I just was going to mention real quick, a lot of people like to follow Eric Sprott, right? And he invested again in the company to make this acquisition. And now he has $550 million, over $500 million invested in First Majestic Silver. It's now his largest personal investment in the mining space. So that tells you what he thinks about it anyway. So, but to be honest, what I've been buying recently is some of the pre-producers. And I like this stage because a pre-producer implies they're going to become a producer, but they're not there yet. They're building a mine, gearing up for production. Mm-hmm. I like that because they almost always get a re-rating. You can count on, and think about it, you go from a cash eating junior to a revenue producing company, and you should be re-rated. So they usually get that re-rating. So the two that are on my radar right now that I'm actively buying right now is Ascot Resources, ASCOT Resources. You can look that up. They basically have two gold projects that are going to feed into a mill. The IRR, the combined IRR there is over 50% now. We did really well in pure gold, and I think this could be the next pure gold. And just to give you an idea, those stocks, when they get the re-rating, leading up to production, the stock tends to rise. But it's the last 3 months where that sweet spot is, where they tend to rise the most. So Ascot's probably not going to be in production till the end of 2022, right? So it may not be till next September when you see the big rise in the stock. But of course, between now and then, the stock could be up 50%, easily, especially if gold and silver rise. Right. The other one I've been buying a lot, Jay, is Artemis Gold.
Okay.
Yeah, I like that. It's the Blackwater project in BC. It's huge. Yeah. It's got over 8 million ounces just in reserves, and
amazing year in 2020.
Yeah, amazing year in 2020. That's going to be a mine. It's low grade, but the IRR again is like 51%, I believe. So that's going to be a mine. So I've been buying it on weakness. They're probably further out than Artemis than Ascot in getting into production. But I've been buying on weakness out, building a position while the stock is weak in anticipation of that re-rating 2 or 3 years from now. So those are two also that I really like right now.
Now, a couple companies you mentioned to me in January. One is Maple Gold, an earlier stage speculation. Any updates on your preference there?
Everything I said then is actually still true. They're gearing up now. The JV with Agnico Eagle is closed. They've built up cash. They're looking to drill now. They'll be starting. They're in Quebec, so they're going to be drilling here real soon. This year is going to be a major drilling year for them, so it could be potentially very exciting. There's a lot of things happening there with that company, so I definitely like Maple Gold. The stock has been weak because there hasn't been a lot of news recently, so this has been a good opportunity to buy for those that maybe want to take a stab at that. But I do like Maple Gold. There's a lot of potential there. It is a speculation, but wow, lots of potential there. Could be exciting.
Okay. Any others that you want to call out before we wrap it up, Jeff?
There's a lot. Frankly, do as I say, not as I do. I own probably too many juniors. It actually got to a point where it's getting hard to track them all. So that's why I kind of started putting some more money into the pre-producers that I mentioned. But another one I really like, I've been buying is Metallic Silver. That's up in the Keno Hill district, which is one of the highest grade silver districts in the world. They're onto some things there, lots of drilling going on. They're surrounded by 8, I believe it is, other mines or projects in that area. So it's a very fertile, prospective area for looking for silver. So I like that one too. Okay.
Look, Jeff, I appreciate your time and thank you for coming back on and updating our audience. Thank you.
Thanks for having me, Jay. Look forward to seeing you in person at the next conference.
100%.